What's up, YouTube fam? As advertised, as promised from last night's video, I told you guys when we opened up today, our account would be near 25,000, right? We're very close, and let's get into why and let's get into how we've been able to generate $4,900 in profit from the starting date, which was November 6th. So it's been 37 days exactly. So exactly 5 weeks since we started, and we've been able to do 25% profit. And as you guys can see, it says it all right here. So basically, as I promised you guys, right, I told you guys AVGO would expire worthless. So what I'm going to do is I'm going to close that position right in front of you guys, right? So not much to do. Click submit and done. That's it. Cash secured, right? Maybe I could edit in a little cash register noise, maybe not, I don't know. I like to make these videos very simple, right? I get in front of the camera, I get in front of the webcam, and I tell you guys a little bit, right? That's all it is. So there it is, position taken, position closed, right? As for this ACHR position, I also told you guys, ideally, we would be up, right? When I recorded the video last night, we were down $88. Let's look at the chart real quick, see where we stand with this. So the daily looks decent. And the hourly looks like it's going to run. So I'm going to leave it open for now. Maybe squeeze a few more bucks out of it. I've realized that when it comes to these options that are so cheap to begin with, right? Like I got it at 15 cents. I don't necessarily love it. I mean, obviously, assuming it does run, it could jump, pretty quickly. But I don't know. I think I'm going to try to stay for options that are a little more expensive, maybe like over 50 cents, closer to $1, just because naturally they can lose value quicker, right? So those are the two positions. And now look at this, guys, we're at 24.9, putting us up 736 on the week. So another great week. And the week started slow, right? It was a very slow start to the week. We really struggled with that Oracle position. We were stuck in it for a couple days, but we made up for it by taking other positions. So how have we been able to generate $4,900 profit, almost $5,000 in 37 days, right, off a $20,000 account? The account size is probably the most important detail, right? Because if you have, $100,000 or 200 or 300, like 5K is nothing, right? But when you're talking 20,000, and you're doing it on repeatable small wins, right? Like it's not like I took one lucky trade, right? Like obviously, if I would have bought 100 shares of AVGO yesterday, I'd be up. It was at 180, so I'd be up almost 4,000, right? Just off that one trade, right? Obviously, if I would have bought calls, right, 0-day calls, I'd probably be up 80,000, right? But in the end of the day, right, I'm not here to risk my whole account in YOLO trades, right? We're doing it in a way where it's going to be more sustainable than anything, and that way is by selling puts, right? Now, obviously, for those of you who are new here, when it comes to selling puts, the way it works is our strike price on this play was $170, right? So AVGO was at this price yesterday, right? This is where it was trading. If it would have came all the way below here, right, and then closed today at 4 p.m. below this price, then we would have been obligated to buy it at $170. Now, if it would have came below here and then did like a little bit of bounce, our premium still would have lost value. Because when it comes to earnings kills premiums unless it does something like this, right? Like if you bought calls here, then yeah, you would have made money. But for the most part, unless the earnings does a straight move like this, then it's going to kill the premium, especially on a Thursday or Friday, right? If it's the same day expiration. So in this case, right, let's just say it would have done. It's funny, every time we make a video and I go to use the path, I always can't find it. Oh, it's right here, right? I got to just remember that. But let's just say it would have done something like this, right? And then did this. Once it did this, we would have been able to get out and close it for a profit. So we wouldn't have been stuck holding, right? Now, obviously, if we would have held and then it would have made the next move down, right, then we would have had to hold or just close it for the loss, right? But the point is that when it comes to selling puts, right, it gives you the ability for the market to dump, right? But as long as it hovers around your strike, or as long as the premium is losing value, you can still make money. So that's why this is more sustainable than just buying, right? Because if you buy a 180 and it dumps to 170, you're down $1,000. But if you sell a put at 180 and it dumps to 170 and then it, hovers around, right, does a little bit of this, right, where it just chops right at your strike, or like I said, if it even comes below your strike and then just comes towards it, right, because options move based on acceleration and a lot of other factors, you would still have chances to profit, which is what we did earlier this week. So if you want to see live examples, go to the videos from the beginning of this week, the Monday, Tuesday, Wednesday videos, and you'll see what I'm talking about. But that is ultimately why we like selling puts, right? That's why this is a very important part of the strategy. The other part of the strategy is looking for earnings plays, right? So that's why we did AVGO today. And I'll tell you guys, if you would have bought every time I've sold puts on these earnings plays, you'd be up a lot of money, right? So I'm definitely going to consider implementing new parts, maybe buying a couple shares, as like a hedge, right? So this way, if it shoots up, not only do we collect the puts premium, but we also, make a little bit more. I'm considering it, maybe not yet, because I'm, very happy with how the account has grown, and I don't want to get greedy, right? That's what the thing about these markets is. There's so much money, right? Every time you have a position, someone is making 10 times, 100 times what you've made. You can't get worried about that. You can't get so focused in that. You can't get obsessed with that. The only thing you should be obsessed with is your account, right? Where'd you start and where have you grown it to, right? Because I know a lot of people, myself included, who would have put $20,000 into a Robinhood account and within a month would have been gone, right? And I've done it before. I've blown accounts, I've blown big accounts, and I don't want to do that anymore, right? I don't want to make quick money. I want consistent wins, right? Like making 5K in 37 days off $20,000 to me is exciting because, to have the discipline and do that for a year straight, 2 years straight, one, this account will be very high, right? Because it compounds, right? 10% of 20,000 is 2,000. 10% of 25,000 is 2,500. 10% of 50,000 is 5,000. So it's like, if I can just have the discipline to get this account to 100K, obviously you guys can see the math, how it'll become much bigger wins. And that's what you need to be focused on, is getting that consistency and watching your account compound, not obsessed with how much you could have made and how much you should have made, etc. So really quickly, really simple, right? If we go to the earnings hub calendar, we'll see that, this is why OPCO was on our watch this week. This is why GME was on our watch. This is why Oracle was on our watch. Adobe's, Macy's, these were all on our watch because of the earnings. Some notable plays we could have taken were AI, MDB, but we didn't for whatever reason. Next week we're going to be looking at MU, Nike. I believe FedEx is too expensive for our price point. And what is CCL? I know it's Carnival Cruise Line, but what is the price of that stock? 26. So yeah, this will probably be a stock we'll eventually look at as well. Let's see what these premiums are like. Yeah, not bad. So, ultimately there's a lot of good stocks to be looking at. Someone asked me, what do I do when it's not earnings season? First of all, it really does go by quick, right? Like earnings season, it's every quarter and there's different sectors of the market. So there's really just always earnings season. All right, there's no earnings for this week, right, of December 30th to January 3rd, but it's also New Year's. There's earnings here, even if we don't want to trade any of these. Interactive Broker, I don't know how much that is, but, that could definitely be an interesting one. Obviously any of these, Discover, Charles Schwab, like these are trustworthy stocks. And then before you know it, you're back at tech, right? So in terms of earnings season, it's like there really isn't such thing as earnings season. Like, if you're looking at the earnings calendars, there's always some sort of stock you could trade, something that has a high market cap, something that, is worth putting your money into. But with that being said, when there's no earnings, there's still tons of great stocks that you could look into. And like I said, I think a key is just keeping your ear to the streets, right? Like IonQ is a stock I saw today recently on social media. Also, these leverage positions, right? These leverage indexes like ConL, right? Fun fact is when I first started selling options, it was actually to sell options on Coinbase. And then Coinbase went on a huge run, and my plan was to only do it with 20K. So, the fact that these leverages, these funds exist, right? MSTX, another great one. Even a stock like ACHR, right? It doesn't have earnings, but since it's so volatile, the premiums pay well. Now, again, I did already acknowledge that, like, I don't love going on such cheap premiums just because they the way they move is, in my opinion, a little janky, right? Like you won't see any update, and then I know where to lose 50%. But with that being said, for my account size, like this is decent money, right? $700, for 7 days. It's solid money for a $20,000 account. Now, do I want to be risking my full account with this type of stock? Not really, which is why I'm only 11 in on this, right? And I probably won't add to it. Truthfully, I'll probably end up closing this position at some point today, if not Tuesday or Wednesday, just because I want to take MU, which where is it? Is going to be the 18th. But the point I'm getting at is earnings season comes by very quickly. And when it's not earnings season, there's so many great stocks you could still trade, right? Another example is TSLL, which we had a position on. We closed it for a couple bucks, right? But let's see. We can go really low here, like a 27.7 or 28.7. And, it's like... So yeah, we want to go the full account basically of everything we could risk, 544, right, for the next 7 days. And of course, the idea behind it is that you don't even have to wait the full 7 days. That's why we've been able to make so much money so quickly, is because we've taken these plays, closed them after we've gotten 30, 40, 50% of the value, right? So let's say you open that for 588 by Friday, and then by Tuesday you're up 250. You close it, and then you have a position like MU, right, where it has earnings on Wednesday. Right, so let's see, $100 a share. So figure we buy 200 shares, or sorry, we sell puts on 200 shares. Right, it's like boom. Now these premiums are gonna, they're gonna hold value because that's how it works when earnings comes around. So I'm not worried about getting them Monday or Tuesday. Like they're still gonna be high in value, which is another great strategy I've contemplated. I haven't done it at all on this channel, so I don't want to, you guys to get confused. But I've also contemplated the idea that, like, since these premiums hold so much value going into earnings, it could definitely be worth buying options, right? Buying some puts, buying some calls, and holding them, up until Wednesday, right? I know a lot of people do the opposite. They buy puts or calls right before earnings because they're gambling. But if you want a more sure win, it's actually buying options, holding them up until the earnings reports, then selling them right before the earnings report. And that's a great way that you're going to win a lot of trades. So that's why I'm not so concerned about these premiums losing value from today up until Tuesday, because truthfully, like, they're just not going to. That's just how it is with earnings. Like, you're better off almost taking it right before the earnings report. So with that being said, my point is like, you can take a play today, hold it from today up until Tuesday, collect maybe half of the value, make the 280, 250, then take this play with, in my case, 200 shares, we'll do, let's just say a 30 delta or even a little higher, a 33 delta, right? And boom, now you got 640. So you got 200 plus 640. So keep in mind, if you took TSLL, right, and you held it all the way till Friday, you would only make 580. Now you're making 200 plus 640. So you're making, 40% more, 50% more. So that is how we've been able to grow this account so fast with selling puts. Obviously, the kicker is days like today, right, where Avgo shoots up. Yeah, we collected 250, where if we would have bought 100 shares, we would have collected $4,000. But, there's also cases where we could have bought the 100 shares and lost $4,000, right, where if it would have went against us, we would have lost, $2,000 or $3,000. Or even less potentially, right? Because, again, if you buy at 180 and it goes to 160 and then bounces to 170, you're still down between $2,000 and $1,000. But if you sell puts on that and it bounces towards 170, your puts can be up again, give you the chance to get out for break even, move on to the next play. And that's how it works, right? Now, obviously, there is going to be eventually moments where we're going to sell puts on an earnings play and it's going to dump, right? And in that case, we'll manage it, right? Either we hold it and we keep selling puts, or we hold it and we sell covered calls until we get out, or we hold it, wait till it comes back to our entry, then sell covered calls to get out. There's a lot of things we could do. Of course, we could even just take the small loss and move on. The moral of the story is there's no point in worrying about it now, right? We're always prepared for it. We're always ready. We take every position with the possibility of knowing that we can get assigned, right? We take every position with that in mind. If we didn't take every position with that in mind, we wouldn't be selling puts, right? We wouldn't even be doing this strategy. We would just be buying shares and just YOLOing, right? And just seeing what happens. And ultimately, yeah, maybe at this moment, if we would have been buying shares, this account would be up more. But I'm not in this for that. I'm in this for creating cash flow, having a system that's going to cash flow month after month, year after year. So that when I get this account to the 6-figure range, I know that I can make, 5, 10, 20% every single month for the rest of my life. And that's where financial freedom comes from, right? Financial freedom is never going to come from one big win unless it's, tens of millions of dollars. If you come off a big win for 6 figures or even $1 million, like, you're still always going to want some level of consistency. And that's how I look at it, right? Is like, I might have 6 figures in other accounts, right? But where I develop the most confidence is something like this, where it's consistent, right? Because now, yeah, if I would have put 200K in this account, I'd be up 49,000 in 37 days, which is, great money under really any circumstance in any city. So, that's kind of where my head's at, is like thinking more of just like a real fund manager, right? Like a hedge fund manager. Like, instead of being some guy who, shows up to the casino and gambles and tries to YOLO and make X amount of money. It's more like, if I was managing other people's money, right? If I was managing a $200 million hedge fund, what would make the most sense to get the highest returns possible and ultimately in a safe way possible? And I think selling puts, on these stocks, with earnings plays. Now, obviously, the only thing I would do differently is I wouldn't be using the whole account, right, on earnings plays. Like, if I had 200,000 or 2 million, maybe I'd buy, 40, 50K worth, or sorry, sell 40, 50K worth of puts instead of, in this position, I'm almost always using the whole account or close to it, right? Like, obviously this position, I'm only using like 7,000, 8,000, but that's just the moral of the story, is just developing this system and creating something that I know is going to win week after week, month after month. So I hope you guys have enjoyed this video. I hope you've been following along. For the people who've been with me from the start, you've seen everything unfold in front of your eyes, and I don't plan to stop anytime soon. So I hope you guys, again, enjoyed this video, and I'll see you guys for the next one.